2 practice exam part 2. So we're going to work on that today. It's kind of a big thing. It's actually takes some time. Hopefully we'll get to practice exam part 1. There's going to be extra credit points in that one too. So if we don't get to that one, we'll do it on Tuesday. But we'll see. Let's not be negative just yet. We'll play time to be negative later, okay? All right, so today we're going to, yep. So this is the Chapter 2 practice exam part 2. And this first part here is just basically debits and credits. Which account gets, when something happens to an account, what happens is a debit or a credit. And be careful on these because it's only about the account that's listed. For instance, this one's cash. Oops. So only thing about the cash, only thing about what's on the other side or something like that. Same thing with revenue. Well, if you have revenue, once you have cash, well, just the revenue account. Only the revenue. So only look at the accounts that are listed when we go through these. And yeah, you're absolutely right. There'd be 2, but we're just doing for the one account. So would this one account be a debit or credit? If it increased or decreased or whatever. Okay, so excuse me. Now this sheet on the right here for these. This sheet right here will tell you the this is at the end of the handout, by the way. I think. It's kind of matching them up, whichever one you do. So for instance, cash account increased. Cash account.
Debit.
Yep. So this is where this first one is really just, matching them up. All right, so this would be a debit. Revenue account increased.
Debit.
Let's see, revenue.
Credit.
Revenues are always credit. So revenues and expenses are kind of the easy ones for the journal entries, anyways, because they really are they're always increasing. Basically, it's possible they could decrease, but usually something kooky happening. Oops. Supplies account decreased.
Credit.
Yep. Bonds payable. Increase.
Debit.
Yeah, be credit. Yep. Let's see here. Yeah, so bonds payable. I don't have it. Oh yeah, I do right here. Increase in credit. Utilities expense. Debit, credit.
Debit.
Yeah. Yeah, expenses are always debits. So revenues and expenses, once you get used to those terms, revenues are always credits. You can look at here and see that. And then expenses are always debits. They say unless something kooky happens, that's pretty much the way it is. Okay, so I almost did it wrong. After that lengthy explanation, I almost did it wrong. Revenue. Revenues are always
Credit. Credit.
Ooh, tricky one, unearned revenue. Increased by 580.
Credit.
Yeah, unearned revenue increase, so it's a liability and it's gonna increase with credit. Wait, I jumped ahead, I missed one, I'm sorry. I missed the equipment, hold on. These days I'm gonna learn how to use my computer. Okay, the equipment account decreased by 400.
Credit.
And so equipment, it decreased, will be credit. Advertising expense increased by 750. Expenses.
Debit.
Debits, yeah. I say that, you know, unless something kooky happens, that they're debits. Okay, now you'll notice something here. These are stripped down. We're not going to fill in tons of stuff on these. We're just going to, now we'll pull up the accounts we need. I'll put notes on here for mine anyways on which accounts we need. And then we will figure out where they're going to go. Okay, so what accounts are we going to need for this one? Purchase supplies with cash. Oh, I know, I can put it underneath here.
Cash and supplies.
Yep. So we need cash and supplies. Okay. Okay. Is the cash going up or down?
Down.
Supplies, up or down?
Up.
Up. Okay, so from this, we can make the journal entry. Right, I mean, and we can just look on this sheet here. Clean this up a little bit. We have cash. Supplies. Let's say the cash. Cash is decreasing. Will it be a debit or credit?
Credit.
Credit. Supplies. Yeah. Right. It has to be. So cash is an asset going down. Supplies. I can put these in here. Okay. Borrow cash from the bank using a notes payable. So what accounts?
Cash and accounts payable.
Good. You probably use what they have on here though, the notes payable. But if you put accounts payable, that's fine. It is a payable. That's a big thing. A note payable, say just a note in general. A note is a document. It's like a post-dated check. It's like we'll pay you $8,000 in 90 days or whatever it is. So it's actually a like a contract thing. Okay, is our cash going up or down?
Going up.
Good. And some people get, you know, they don't get too tangled up in that, overthink it, because when you initially get the loan, your cash goes up. Now, in the future, yeah, you gotta pay it, but until you pay it, your cash is up. Notes payable, up or down?
Up.
We owe more money now. And here. All right, with cash. So cash and you don't have, I do have notes payable. There we go. Notes payable, cash is going up with a debit. That's right, it goes up with a debit. So our cash is going up. And quite honestly, you notice it going through here, if you're in a hurry, you really don't need to do. If you got one of them, you got both of them. There's only two accounts. But the notes payable is increasing with the credit. And again, it's you're gonna have to pay it off in the future, but at least initially your cash goes up, which is probably, you know, you probably got the loan for a reason. Buy inventory or whatever it is. Okay. Okay, received utility bill. This one's a little bit tricky.
Utilities expense and accounts receivable.
Very close. The utilities expense is absolutely correct. And by the way, that one, I'm sorry?
Was it utilities expense in cash?
Not cash. So yeah, it's an account, but not accounts receivable.
Payable.
Yeah.
Yeah.
So utility expense is, now, whenever you have an expense, you know exactly what it is. It's going to be a debit, but we'll look at the table here in a second. And this will be accounts payable because we owe them. We're going to have to pay it. We're not going to receive it. We're going to pay it. Okay, utility expenses are always going up. Accounts payable, going up or down?
Up.
Up, but we owe more money now. And again, expenses, expense going up. Accounts payable is also going up. So utilities expense is always a debit. Accounts payable is going up too, increasing the credit.
Is it always that when you got when you figure out one of them, the other one's gonna be the one that's not used? So like if we got a debit, is it always gonna be that the other one's gonna be a credit?
Exactly. Yep, that's exactly right.
Is there any time that there's gonna be like two debits or two credits or anything?
It could be, but the debits have to equal the credit. So, wait here. So it's possible to have more than two accounts. You know, 2 or 3 accounts. If you buy land and equipment together, or so whatever it is. So it is possible to have, you know, 3 accounts, 4 accounts, whatever. But the debits also have to equal the credit. So if there's only 2 accounts, like on this one, if you know that the expense is, they're always debits, whatever's on the other side, whether it's cash or accounts payable or whatever it is, it's gonna be the credit. So yeah, these two sides have to equal. So especially if there's only 2 accounts, what, you know, on the other side, it has to be the other, whatever's not there. So like just like what you said. Oops. Put a number in there so that our debits equal our credits. Okay. No employees for 1 week's worth of wages. 1 week of. So we owe employees for 1 week of wages.
Wages expense and wages payable?
Yes and yes. So wages expense. Again, the payables, you put accounts payable, I'll take it. It's wages payable is probably the more descriptive of those. But so the key here is have a payable. Okay, expenses are always going up. The wages payable, is it going up or down? Do we owe more or less?
More, so up.
And so we owe debits and credits. Although this is an expense, so it's a debit. I do wages expense. Okay, so wages expense and wages payable. So expenses are always debits, but this wages payable is going up, it's going to increase with the credit. So there is a reason why it's a credit. Oops. And wages payable, if you put accounts payable, that's fine. It's again, the more descriptive one is the, what am I doing? The more descriptive one is the wages payable. That's the liability. So as you get more familiar with this, you do kind of see the genius of it, of the entire transaction. I mean, it's a shorthand. It's a very severe shorthand, but it does work, which is why we still use it. Okay, use cash to purchase equipment. What are the two accounts? Ooh, should be underlined.
Cash and equipment.
Yep and yep. Is the cash going up or down?
Down.
Down. Equipment?
Up.
Up. Good. Okay, so we have cash and we have equipment. Cash is going down, so it'll be a credit. Equipment is going up, so it'll be the debit. And again, if you just get one of those, you know what the other one is. You know, so you just got the equipment one, you know what the cash has to be. Oh, I got too many things here. So cash, equipment going up, asset, and plus will be a debit. Asset going down, they're both assets. Trading one asset for another. Paid cash for a truck.
Cash and supplies or equipment.
Yeah, probably equipment, but you're right, it's another asset. So yeah, this would be probably equipment. Cash up or down?
down,
Equipment, which isn't spelled like that, is going
up,
I worked at a case where place where they had petty cash. They had tons of money in petty cash because they had to pay for shipments coming in. It was like a research place. I used to work for Navistar, and this is a research place. So their petty cash fund would have like $10,000, and this is back a number of years. But they actually bought a pickup truck with petty cash. They had this emergency thing that they couldn't get a rental truck. So they went to a dealership across the street and bought a truck out of petty cash. All right, so cash and equipment. So which one goes up and which one goes down? So cash is going down. It will be a credit. Let me zoom in on this thing. So cash is going down. Equipment's going up with a debit. Equipment. Uh, Supplies and purchase on account. What accounts we have?
Supplies and accounts payable.
Yep. Supplies going up. Accounts payable. Also going up. We owe more money. No, this is getting a little bit cluttered. Okay. So supplies going up. Accounts payable is also going up. So supplies are going up with a debit. At that point, you know what the credit's going to be, but down here it's going to go up with a accounts payable is going to go up with the credit. What's wrong with it? And you don't need to put this this thing in here. I'm just putting that in for let you know how I got the credit, the debit and credit. Okay, this one is a little bit tricky. Perform services for cash.
Is it cash and service revenues?
Yes. So cash is going up, and so is service revenue. Now, revenues are our favorite thing. One of our favorite things. Anyway, whenever you see revenue, credit. So you know what the other side, whatever the other on the other side is going to be. A debit. So whenever you run into revenues, it's kind of like expenses. There's only one possibility. And just that quick, I forgot what's on the other side. Cash. Okay, so cash goes up with a debit. Okay, so again, you run into a revenue. You can just put revenue too, either one. Purchase office equipment on CAD for, to me, guess it. Purchase office equipment on credit. So what accounts?
Accounts payable and equipment.
Accounts payable going up, we owe more money. And equipment, if you would office equipment, that's fine too. Is also going up. So our liabilities are going up, which is bad, but our assets are going up too, which is good. And that's the way life is. Some things are good, some things are bad. Okay, so accounts payable. I guess. Equipment going up, debit. At this point, you can stop. You know what the accounts payable is going to be. Credit. So equipment, debit. Oops. I'm in the wrong one. Try this again. Hey, look at that though. They both have equipment in it. So I'm going to leave this one. See, yeah, it wasn't something stupid I just did randomly. It may have appeared that way, of course. The entry die. Oops. And so this next one though is going to be, you know, you'll know it's not as easy as the other ones because there's 3 accounts. So you can't just say, okay, you know, equipment's a debit, so land is a credit. It doesn't work that way. You gotta kind of chug through these a little bit more. Okay, land equipment for, excuse me. Okay, so this is being underlined for some reason. Let's take that off. Okay, so we have equipment. Oops. land. And cash, right? Okay, equipment, is it going up or down?
Up.
Up. Oh, that's not up. Hold on a minute. And land, same thing. Up. Our cash is going down. Okay, these are all assets. Okay, so cash is going down. Land and equipment are going up. Okay. And well, each of these accounts is going to have a different amount in it. You can see that these both add up, right? These are both. You know, this side is 25,000 in it. Oops. This side is 25,000. So while the individual accounts don't match up, the debits still equal the credits.
When we have one like that, do you want us to do that at the bottom like you just did?
You can for yourself. You don't have to do it. No.
Okay.
But as again, I wanted to just make the point that again, well, none of these accounts have the same amount. The debits equal the credit, so we're okay. And basically, this is all just shuffling around in the asset section. It's trading one asset for two assets. I might as well go ahead and mention it. Sometimes in accounting, you'll break this up into two different journal entries. And you say, well, why? The reason being is if you put 25,000 in cash, it's going to be hard to know what you paid the 25,000 for because you go through the records, you're not going to see a 25,000 for anything. So sometimes sometimes it's helpful if you break it up into two different journal entries. Even though you may have made it at the same time, means that whatever the transaction is, just so that whatever goes into the cash equals whatever the asset is, and that way it makes it easier to trace. That's more something if you're going into accounting that you want to pay attention to. Because invariably in accounting, someone asks you where, what is this? What's this number? Where is it? Going to 25,000, and it's just helpful sometimes you can actually point to where, okay, this is where it came from. Okay, receive cash from a customer previously billed. 470.
Cash and accounts receivable.
Yes and yes. So cash is going up. Accounts receivable is going down, right? So accounts receivable, they owe us money, so it's an asset. But now they're giving us the cash, so they no longer owe us. And again, we would rather have the cash anyway, so we're not unhappy with this asset going down. We're happy with it because we get more cash now. So this would look like Cash. Accounts receivable. Cash in this case is going up. Yeah. Accounts receivable is going down. Again, we're probably happy with that though. Make it a little more visible. Okay. And by the way, I think I told you guys, you can abbreviate this. Maybe I didn't tell you guys. Did I tell you guys about abbreviating it? You know, the accounts payable or accounts receivable, this be AR. /R. Did I tell you guys this or no? There's stunned silence. In case maybe I didn't tell you this. So you can use, you can abbreviate accounts receivable AR. It's a very common one. Accounts payable, AP. Those are two common ones you see. And again, you know, if you put AR, that's fine. There's no.
You did mention AR before.
Okay. All right. So stock to an investor. This is one that gets missed a lot. So common stock to an investor, $10,000.
Cash and equity.
Good. To be cash. Going up. And we're probably gonna, it is an equity account. We'll probably put what it is. It's gonna be a common stock. And you can abbreviate common stock. And that's going up to see that's our common stock. Now, what people are tempted to put this as sales. And this is one of the quirky things about business in general. When we do the accounting is you cannot have sales to owners. You know, the owners, they can manipulate the books basically. They can manipulate the income and all that kind of stuff. So transactions between owners are different than that with customers. So these are owners. So we're just selling parts ownership of the place. This is not a revenue account. Okay, this is just selling ownership, and yeah, it is an equity account. So this would be cash. I'm just going to. So all the other, the cash is a debit. The equity account. I give a little more information there, probably need, but it common stock, which is usually the stock that they sell. Common stock is every company has common stock. Preferred stock is kind of a wacky one. I'm going to right now. Okay, so it'll be a cash me to debit. CS. Is the equity account? And this one is one that probably doesn't happen all that often. Yeah, you don't usually, well, it depends on the size of the company, but selling ownership is, if it's a very large corporation, maybe it does happen a lot, but for smaller ones, it's a very rare one. Whereas something like this happens all the time. This one, not so much. Okay, received a cash, ooh, this is a tough one. Cash advance from a customer.
It would be cash and,
Sorry. Go ahead.
cash and unearned revenue.
Yep, and yep. And true or false, unearned revenue is a revenue.
False.
False, it's a liability. It's an unfortunately named liability. Yeah, so cash is going up. And by the way, you know, if you take these in, cash going up, debit, you know what the other side is. But come down here, we'll do it there. Revenue going up. He's making a mess out of this. Okay. Come on, you. Okay. Wrong one. And so this one's kind of like the opposite of accounts receivable. This is when accounts receivable is when we did the work and they haven't paid us yet. This one's just the opposite. They've paid us, we haven't done the work. And it could be for whatever reason. It could be, you know, a new customer or something, you don't know who they are. You say, okay, I'll do it, but I don't know you, so you pay me up front. And this is not a revenue. Issued cash, we already did this one. Issued cash, issued is the same thing as sold common stock. But again, this is not a revenue. So the accounts are. You guys are sleeping. Fine, I'll put it myself. All right, so our common stock is going up. Equity account. And our cash is going up. Oh, wait, no, don't put those in down here. Yeah, we'll put them in down here. I'll start putting them in down here. That'll be a better place to put them. Okay. So equity going up, cash is going up. Come down here. Cash is going up with a debit. You know, the journal entry. Come in there. Common stock could be CS. And by the way, you don't need to put both these in, it's one or the other. The CS is just short for that, so. Okay, I need to put that in. Already got it on there. Yeah, last one. Yay. Okay, so bill customers for services delivered. So bill customers, so what accounts are we gonna use for this one?
I could be wrong, but I put accounts receivable and service revenues.
You're right and right. Okay, so billed customers, accounts receivable, they owe us. And you could put AP. Asset going up. And service revenue, you could also just put revenue, either one's fine. Oops. And revenues are always going up, but we don't even need to know that because we know that revenues are always up here. They're always credits. So whenever you see a revenue, accounts payable.
Shouldn't it be accounts receivable?
Yes. Yes, it would be. Thank you. Thank you, thank you. That would be bad. Thank you, thank you, thank you. And wait, down here is wrong too. This is AR. All right. Okay. So that is part two. And I'm going to send out part one right now. Yeah, so I got. Watch me send out part one. That be exciting. Okay, so. So momentarily, you should get that. I'll put the class handouts right now.
I have a question. The work you just did was exercise 2 through 7, right?
No, this is the practice exam part 2.
Okay. Gotcha. That's all I needed.
Yes. But now there is a drop for that other one though, the exercise 2-7. So there's a drop in there. You know, I should save this. That would probably be a good thing. Something weird is happening on my computer. It's signing me out of everything. Okay, so it looks like you guys. Wait a minute. Is that right? No. He doesn't get it yet. Let's try that again. Oh, there it comes. I'll send it out again just to make sure. There's some kind of delay happening here.
So do you want us to just turn part 1 in, or do you want us to turn part 1 and 2 in?
Good question. What we're going to do is part 2. I'm going to start a for part 1. I'm going to start a survey. So you get extra credit points for it.
Oh, okay, thank you.
So to answer your question, and go back to that. Oh, not that. So this will be turned in. This one will be done in class, and I'll just take the survey. So this one will get turned in from survey, not turned in. So I will put the survey out there. So if you're signed in, if you answer credit for the survey, you will get credit points. Or poll, I should say. Okay, so there should be a poll that pulled up on your screen. Hopefully.
I got it.
Yes, it's here.
Okay.
Yeah.
So you're going to go through each of these. And unfortunately, you have to answer all of them to submit them. So go through each of these and see if, you know, whatever your answer is for number 1, put it into A, B, C, D. Now, these should all be A, B, C, or D, though. There's no E or there's no question. So I think there's only 10 of these. I mean, yeah. There's 10 of them. And you get extra credit points. And so after today, what I'm going to do is, you know, I'll download the poll. So whoever participated in the poll will get the extra credit points. And I will also send out the exam later on, probably tonight, to be honest with you. Probably tonight the exam will go out, and you'll have until, let me write all this down. The exam will be due on October 8th.
Are we gonna go through any more material in the exam, or is it what we reviewed so far it?
So the exam will be what we just reviewed. this went through for the chapter of the practice exam part 2. And then some of these multiple choice questions will be on there, and make sure you put answers in for these because these are, the group can get extra credit points up for.
No, I mean the exam that you're sending. You say you were handing out the exam today. You're gonna
Later on
email
today,
me
I'll
the-
send it out, yeah.
Okay.
And so you're, yeah, yeah, so the, yeah, so the, some of the chapter 2 exam today. So this will be, I'll send that out and it'll be due on. Yeah, what to say. Just that quickly, I forgot. Due on October 8th. So you have some time to work on it.
So what are we doing with this?
Okay, so you got a survey in front of you, right?
Yeah.
Okay, so for each one of these, you're gonna go through and answer the question. So collection of a $600 account receivable, what would happen? You know, A, B, C, or D, and you're gonna put that into your survey. So if you picked answer B, right, I have no idea what's what I want. But if you answer B, you click B. Answer C, you'll click C for the first one, then go to the second.
You put this in Blackboard.
No, in Zoom, in the survey, and in the poll, I'm sorry, the poll. You get the poll, right?
Yeah.
On the screen. So on the poll for question number 1, you're A, B, C, or D. You're gonna answer one of these. So whichever one of these you answer, you're gonna put that into the poll.
Can you go up a little bit?
Yeah, now you guys have the this the practice exam part 1 is emailed to you guys. It's also in Blackboard. So you can pull it up on your own in Blackboard.
I don't see it on my email.
Should be in there twice. You can go into Blackboard. Blackboard class handouts. The very last thing. Practice exam.
I guess, yeah. You scroll down to 3 and 4.
Yeah, you know, you get download these, right?
Yeah, man. Yeah, it just keeps. I don't know what's up with my computer. It just keeps like not letting me do the poll and answer the questions. I have to like minimize and do all this stuff.
Okay. By the way, you guys, if you do have a problem with your email, which, by the way, is entirely believable. I had a real problem with my email. If you give a ticket, there's a in Blackboard. Oh, wait for just a quick second. In Blackboard. If you go into Roosevelt Tech Support and click there and start a ticket, they can help you with it. And mine was all messed up. My email was all messed up for a while. It was I was only getting a few messages through. I remember the first week that I contacted them. They said, "Well, you got these 3 emails." I had like 30 for the week, and the only reason I knew that there was more out there is because they were being forwarded, and some were forwarding, some weren't. But it was just a very strange thing. But anyway, and it would automatically delete a lot of my emails too, which was not something that I had set up to delete. It was deleting my boss's emails. I have 2 bosses, and it was deleting their emails every time. So I had to look in the trash bin for their emails. But anyway, they fixed it. So. Oops.
What do we do when we finish?
Submit it. Submit the poll. So you put it, put it in the poll and then submit it in Zoom, in the Zoom meeting poll.
For number 5, a paid dividend does that mean that it's a dividend you paid for and you're receiving?
Which one? This one?
Number 5.
So the company paid dividends out to the shareholders.
Okay, so the shareholders are receiving the dividend.
Right. So the company is paying the owners, basically.
Okay.
Okay, try to finish this up here next, soon. In the next soon, try to get these in here. And go through the I'll give you the answers to them. We'll see how you did. You're still working on it?
I'm just reading through my answers and then I'm gonna.
Do we just leave when we're done?
Well, I'm gonna give you guys the solutions to them. So let me give you.
Okay.
Yeah, is anyone still working on it?
I'm just reading through my answers and then I'm gonna submit it.
I'm finished.
Okay. All right. Well. Number one is collection of accounts, $600 accounts receivable. Cash goes up, accounts receivable goes down, so it increases cash. Decreases accounts receivable, it's A. Let me change that.
Is there a way we can see our results?
Yes. Well, it looks like some more, there's still some more coming in. Hold on. Is anyone still working on this? Okay. Looks like the first one got missed. So click accounts receivable, cash goes up, accounts receivable goes down. It's an asset and an asset. Number two. If an individual asset is increased, then, okay, if assets go up, our accounting equation has to balance. So if there's an increase, can't be a decrease in liabilities because if assets go up, the other side must go up too. If it's C, is that if an asset goes up, then there could be a decrease in another asset and still be in balance. If the liabilities or equity go down and assets go up, it's not going to balance. Okay, so that one is C, which you guys got. Purchase asset and account increases assets and liabilities. You guys got that. Number four, the payment of a liability. Increases assets and liabilities. You guys got that one.
Hey, Professor, do you think you could scroll up real quick? I just want to take a picture of the correct. Thank you.
Paid a dividend. It's A. It looks like you guys tied on that one. That one's kind of a quirky one. So decreased assets and stockholders' equity. The dividends come out of retained earnings.
I'm so sorry. Can somebody please turn their mic off?
I guess.
I'm so sorry about that.
No problem. Okay, Courtney Company purchased equipment for $10 cash. As a result, assets remained unchanged. One asset went up, equipment went up, cash went down. Yes. I'm way late here. Okay, so debits. They increase assets, decrease liabilities. Got it. Eight. Good. Recording the amount of the debits that equal the amount of the credits. 9. Giving foreign services, but not received debits, accounts receivable, credits, revenue. Yes. 10. A company receives a utility but will not pay it right away. B. Yes. All right. You missed the first one. I'll tell you what, I'll go ahead and give it all. Give you a +4 on those. I gotta add them into your other
Would you
ones.
be willing to show answers 2 through 4? I'm so sorry, I missed them.
Yep. Oh, 2 through 4.
Thank you so much.
I can read them off. 1, if you're gonna write them down. 1 is A. 2 is C. 3 is B. 4 is D. 5 is A. 6 is C. 7 is C. 8 is C. 9 is A. And 10 is B. And I will put in, so +4. Okay, so this is safe from the poll. I'm sorry. So +4. Okay, you guys got classes to go to, so I'll see you guys in this class, but I'll add 4 to, so you turn in chapter 2, practice exam part 2. The chapter 1, you do not have to turn in because we just did it. And I will add that in. Okay. Questions? I will save the poll. Yeah, stop sharing. Okay. So yeah, practice exam part 2 will be turned in. Part 1, you do not need to turn in. Okay. Okay, guys, I will see you Tuesday.
Thank you.
Have a good one.
I will see you.
Thank you, Professor.
Okay.